this last bear market started in the early 1980s, is 40 years on, and we now have a huge amount of money printing and government spending. And I think there are good grounds for thinking that the bond bull market has finally come to an end.
Welcome to Breakouts with Breakingviews. I'm Rob Cox, the editor of Breakingviews, coming to you from Zurich, Switzerland. And I'm talking to Edward Chancellor, who's in the UK and wrote a fascinating piece recently about the end of the bull market in bonds. Eddie, what's the big picture here? Are we looking for another 40 years, but this time of underperformance versus outperformance with the bond market?
It's very difficult to call a turn in the bond market because bond markets bull markets last for decades and bear markets last for decades. This last bear market started in the early 1980s, is 40 years on, and I think there are good grounds for thinking that the bond bull market has finally come to an end. You see, in the last 6 months, 100 basis points has been added to US 10-year yields. Now, I suggest that last August we see the trough was the trough in the Treasury market, and we're not going to go back to that point.
I mean, the implications are huge from an investment perspective, but if you're trying to much less preserve your money, much less outperform the market, like what do you do if the sort of fundamental basis of the bond market itself is crumbling down?
Well, I mean, crumbling is probably putting.
You're getting your money back. You're just getting it back.
Think of it this way: everything about finance and investment that we've seen over the last decade, and even the decade before, has been geared on the assumption that interest rates will continue falling, long-term bond yield, or at least stay low. So that means you lever up companies, you invest in companies engaged in financial engineering. LBOs take place, mergers take place, and so forth. That growth stocks do better than value, and that you want to take, as investors say, duration. Now, if the bond bull market has come to an end, you don't want duration. You want value stocks rather than growth stocks. You want, dare I say, cash rather than bonds, or you look for investments that are zero duration and perhaps alternative investments such as gold.
What about art and Bitcoin?
Bitcoin is a zero duration asset or an infinite duration asset, depending on your perspective. So even Bitcoin, if it's picking up on the inflationary fears that mark the end of a bull market, has some traction. But whether having increased fourfold in the last 5 months, whether one would actually punt on it now is another matter.
Well, thanks, Eddie. We'll be back with more breakouts from Breakingviews, and we'll be back to your library to discuss more of these things in a couple of weeks. Thanks, Eddie.
Look forward to it.